How's it going, everyone? Welcome to the sweep. We're going to get it started here in just about 5 seconds. As you guys get logged in, feel free to chat in. Any questions you might have or just to say hello. At some point during the session, we'll go ahead and get to those questions. Of course, those questions don't have to be about today's topic. They could be about any topic with regard to day trading or any of the other sessions that we've covered. Feel free to chat in your questions. All right, let's go ahead and get started, guys. As always, like, share, and follow on social media, facebook.com/daytradesmart, instagram.com/daytradesmart, and the number 1, youtube.com/theprovingground. And if you have any questions after that, you can always email us info@daytradesmart.com. All right, so what we're going to talk about today is trading with alerts. Right, so we've got the ability to send out real-time alerts. We've got it all set up, automated, so that when a setup comes in, that a pattern on our indicators come in, it will automatically send out that notification 5 minutes prior to execution. So we're going to talk about that today and what that looks like. The advantages of having these alerts. Now, these are Forex alerts, and you can have them on your desktop and mobile, which is great. Most people want them because it gives them that mobile ability, right? It gives you a technical edge. You're not having to sit in front of a computer all day and wait for a setup. Once you've backtested it, once you've done your due diligence, you're just waiting for the setup to occur, and we will notify you when it's present. That gives you 5 minutes to verify and place the trade. And you can trade anywhere. Right? It doesn't matter where you are. You can be on the beach. You can be in the grocery store. You can be wherever you are, right? It doesn't limit you to having to be in front of your computer or anything like that, right? And they send out 24 hours a day, 5 days a week. So we get trade alerts 15, 20, 30 times a day sometimes, and they're for all hours. So it doesn't matter if you're in another part of the world, right? Or you work a swing shift and you're usually busy, you're sleeping in the daytime, you're busy, until 2 a.m. and then 2 a.m. on, you're available. You want to be able to have some action at that time, be able to get some alerts, be able to play some trades, and that's going to be available for you at those times as well. So let's cover some of these things. So the big picture, most of our students want to trade smarter, not harder, right? So once they've completed backtesting on one of our patterns, they can now fully utilize the convenience of our alerts. For the times of day, currency pair, and setup for which they've backtested, all that is necessary is to wait for a setup. When the setup is present within 5 minutes to the top of the hour, an alert is automatically triggered. So the student quickly checks to ensure the pattern is present until the top of the hour, then places the trade. Once the trade is executed, stop loss and take profit is set, you're done. Right? Simple as that. It is not always advisable to stare at your open positions, as this can cause unnecessary stress and anxiety. So a lot of times, especially when you're just getting started, it's best to place that trade, set your parameters, your stop loss, your take profit, and then just walk away from it, right? Put your phone back in your pocket, or walk away from your computer, however it is that you're trading, and just leave it alone, right? Let it be until it fills. And there are ways that you can get notifications if the trade hits the stop loss or take profit by way of MetaTrader 4, and perhaps that's something we can talk about at another time. But essentially, you can set it up so that when you enter a trade, or when your stop loss, or when your take profit, or any other condition that you've set up occur, then you can get a notification for that on your mobile phone. It'll chime your phone or what have you. It'll let you know that something happened, whether it was your stop loss or your take profit being hit, or your trade being taken if you're waiting for like a pending trade or whatever it may be. So it's a really cool tool, but it gives you the ability to be able to walk away from the situation so that you don't get emotional. And what ends up happening is if you get emotional and you don't have it under control, you can start acting more emotionally, right, and moving your stop loss, or increasing your take profit, or decreasing your take profit, or closing a trade too early or too soon, or whatever it may be. So you don't want to find yourself in those situations. So do whatever you have to, especially in the beginning, to try to insulate yourself from those things occurring. Okay, so here are some mobile apps that you can use when trading from your phone or mobile device, like an iPad. I like trading from an iPad. It's nice because you get a bigger screen. MetaTrader 4 or MT4. Now there is a MetaTrader 5, okay, but I don't recommend that. I would recommend MetaTrader 4 or MT4, so you can search for that in your app store and download that. Now, once you've set up with a broker, whatever broker that may be, and you've got login credentials for MetaTrader 4 on your computer, you'll use those same credentials and that same broker in the app. And there's a way to do that. And there's videos actually on the Proving Ground on the YouTube channel that show how to set that up, how to go into the app, how to access, the settings so that you can attach the broker and put in your password and username, and that way you can have the same account that you have on your desktop but on mobile. Now, I do recommend trading demo on your mobile until you figure out how to use it, because it's obviously different than when you're trading on your desktop. So the buttons are different, where you place a trade, how you set a stop loss and take profit, all that stuff is different. So you want to get familiar with it first, and then once you're familiar, you're comfortable with it, then you can trade. I would recommend then going into your live account and placing live trades. The last thing you want to do is not know how to set a stop loss or take profit, how to close a trade. If you accidentally put in a trade on the wrong currency pair, or you've got your trade in and you don't know how to set your parameters, your stop loss or your take profit, that can cause some unnecessary panic and stress, and so you don't want that. So make sure that you know how to use it really well before you venture out and use it. So MT4 Mobile allows you to have your Forex trading account on your mobile device. Having the ability to place a trade through this app allows you freedom to trade wherever you have an internet connection. And that's going to be true of anything, right? You need to have an internet connection in order to use just about any app on your phone these days, right? So that's not something that's uncommon. Chrome Remote Desktop gives you the ability to remote into your desktop or laptop from your mobile device so that you can see and manipulate your charts and indicators. So it's really cool because you can have Chrome Remote Desktop on your desktop, and as long as your computer, whether it's a laptop or desktop, as long as it's running, it's on, you can download an app called Chrome Remote Desktop on your phone and set it up so that it connects with your computer wherever your computer is. It can be in a different country or a different state, whatever. As long as it's set up that way, then you can remote into your computer from your phone and use your computer as if you were sitting right in front of it. Obviously, you're kind of clicking on your phone versus a mouse, or typing on your phone versus a keyboard. But the same functionality. You can move the mouse around the same. You can type things. You can open and shut programs. More importantly, if you have your indicators up, then you can view your indicators. And so when an alert comes in and you need to verify that the alert is present, then you can remote into your computer that's on wherever it might be. You could be, taking the dog for a walk or sitting, in a park. You could be on vacation, wherever you are, right? You get a notification and you go onto Chrome Remote Desktop to view your indicators. You see what the setup is. You make sure that it's going to stay that way until the top of the hour, and then you can just navigate to MetaTrader 4 on your phone, place that trade, set your stop loss and take profit for the back-tested parameters, and you're good to go, right? That should all happen within that 5-minute window. So you're not taking hours and hours. You're not sitting around waiting for the setup to occur. Matter of fact, you're not even relying on yourself to guarantee that the setup that is there is actually the setup, because we're telling you, yes, this is in fact the setup. And as long as you back test it for that time, then you're good to go. You place that trade and you're set. So Chrome Remote Desktop, definitely recommend it. Even if it's not for trading, guys, it's a cool tool. It's awesome to be able to access your desktop from wherever you are. So just an awesome tool. Okay, so the other thing I want to point out really quickly is Green Chart 2 is in beta right now. Now, Green Chart 2, we're currently in beta with a version of Green Chart that is web-based and accessible through a mobile app. So this is Green Chart, guys. This is where we have our indicators encrypted, right? These algorithms are encrypted into a charting software. Now, Sierra Chart is the parent company for this charting software. Green Chart is kind of our white label. And we have this white label through Sierra Chart so that our indicators are encrypted into this charting software. The only way you can get access to these indicators is to be a member of our organization. Right? You can't; they don't exist anywhere else. A friend of ours who's now passed away, but he created these some time ago. And when he created them, they were just for him. They were just for personal use. And then eventually we let them out into the market. But the only way you can have access to these is through our organization. Now, we are in beta to put those indicators on a web-based version. So it would be accessible through a mobile app. So you wouldn't have to remote into your computer. You wouldn't have to do any of that. You could just open up the mobile app. You'll see your indicators there. In addition to that, when completed, our students will have the ability to view indicators and place trades within the app. So there'll be no need for third-party applications anymore, right? So we won't have to use MetaTrader 4 and Chrome Remote Desktop if we want to trade mobile. It'll all just be in one place. And the reason why we've had to take these steps is because our indicators are proprietary. They're not available just to anyone, right? So really cool thing. So let's look at a setup today and how that would work on alerts. Okay, so we'll look at some of the alerts that came in for this setup today and kind of explain to you how those alerts come through and how you verify them and what have you. Okay, so let's go here, and we're looking at the Euro USD, and these are all, within the last, within the last couple months. I just went back and found some random ones. So right here on the left, we'll look at our first example, and you can see that prior to this creating a Hydra. By the way, let me actually show you this real quick before we do that. So here is, on our site, we have these flashcards that you can download or you can just pull up and you can, save them, whatever you want. Anyway, it breaks down what you're looking for when looking for a Hydra, right? So the TNTs, these oranges and blues, they're not applicable. We don't use those for this setup. Then it'll explain what we want to see in the majors and minors, right? So we want to see green major down, red major up, gray minor down, black minor up. And so they're not crossed or touching. They're creating a hiccup or a double hiccup, right? The pressure, green pressure line, is above the red pressure line. And if we've got all those, and then as an option, we can also have a contrary candle, in other words, a red candle when we're looking to buy. So this would be a buy signal. And then the sell would just be that same thing upside down, right? It would just be the green line up instead of down, red line down, gray line up, black line down, green on bottom of red. And then, of course, there's the option of having a green candle, but it's not necessary. And then when we see this, we want to sell. Now, it doesn't matter if these lines are below this red line or above this blue line. They can happen anywhere in this whole range right here. That can happen. So we get that double hiccup, essentially. And again, a hiccup is just when the lines within the pair, or the lines within these pair lines disagree, right? So the majors look like they're in disagreement, and green is up, red is down. Minors as well. Gray is down, black is down, gray is up. They're not crossed or touching at the end right there. So that's what we call a hiccup. And in this case, we have a double hiccup, right? So both major and minor are hiccuping, and that's what we call a Hydra. And then, of course, green line on bottom in pressure. And as an option, you can have a contrary candle. We would expect a green candle as a contrary candle there. And then, again, just really quickly in reverse for a buy. Okay. So we can see that leading up to this Hydra, we kind of had market pull up a little bit, and now it looks like it's moving down really aggressively. And then we get on this next candle our Hydra, right here. So I'm going to erase this line. So we've got our green up, our red down, our gray up, our black down. Green candle is on bottom, and we do have the optional contrary candle, right? So we kind of got that pullback a little bit as we started heading south, as we started shorting in the Euro USD. So you see we came up, and then we went down, and now it's coming up a little bit. And then we get our Hydra, and we expect to see some short. Now, for the sake of this particular setup, let's go ahead and just use, let's just use a 5 pip stop loss and a 5 pip take profit. Now, I want to preface by saying this may not be the way you would trade this based on your back testing. I'm just throwing out these numbers. I think most of these are going to be fine with a 5 and 5, which is why I'm picking it. Obviously, I already know what's going to happen with all of these. But let's just use this just so we have kind of a goal to shoot for here, okay? So here then would be our entry at the end of this candle, right, which would be 1.19683, and our take profit would be below us at 1.19633. 633. Make that line blue. And then our stop loss would be above us at 1.19733. Yep. Right there, yes. Okay. Okay, so obviously we just want to touch that blue line before we touch that red line. And by the way, this is if we were using this, this would be what's referred to as a 1-to-1 risk-to-reward ratio, right? We're risking 1 to 1, right? So our risk is the same as the reward. So it's a 1-to-1 risk-to-reward ratio. Now, in order for this to work, you got to hit more than 50%, right? Because 50% doesn't break even because you still have commissions, you still have, slippage, or rather overnights, swap fees, things like that. So if you were to hit any of those, but mostly just commissions. Commissions alone would make it so that if you won this at 50%, you would not make profit, you would lose money. So you'd want to win 55% or better, although this is probably going to win closer to 70 and above. Okay, so again, we're looking for a short or a sell trade down to that blue line before it goes up to that red line. Now, if it does both in the same candle, then we'll just look at a 5-minute chart and see which one went first, which direction went first. And that one did go both. Okay, so let's go to a 5-minute store. And let's look at this one, see if it's linked. Nope, not linked. One. Let me link this real quick. 2. Okay. All right. So this 5-minute right here, this is a 5-minute. This is going to show us when we queue it up. So if I go like this, that candle right there is the last 5 minutes of this 60-minute candle. Okay, the price is the same now, 119.683, 119.683. So we know that's the last 5 minutes of that 60-minute candle. So let's look at the first 5, 10, 15 minutes of the next candle, right, to see did it go down by 5 pips before it went up by 5 pips, right? Because from here we can see it went both. It went up 12.9 and it went down 11.3. But did it go down first before it went up? And that's how we determine if we won that trade, right? By looking back historically. So let's measure. Let's go forward. That went down 3.3, so not enough in the first 5 minutes. Then it went up about 0.7 micropips above our entry. Then up a little further, it's about 2.4. And I think 3.7, 3.7 is the highest to that point. And then down 5.9, and then up 12.9. So it actually kind of happened all at once on that 5 minute. So let's go to a 1 minute. All right. And let's back up on this 1 minute. Here we go. And this is going to show, this is the last, this green candle right here is the last 1 minute of that 60-minute candle. So let's see what happens. We know that the first, 5, 10, 15 minutes didn't give it to us. So let's see if on that candle where it kind of went both directions, which one went first, right? Which was this one right here. 5.9, and then that went up 4.7. So just in that one candle right there, that would have got us 31 minutes into the candle, into the 60-minute candle. It would have gone down 5.9 pips and then went up 4.7 pips. So we know that that one would have won, right? And we know overall it went up 12.9 and went down 11.3. So we just wanted to see, did it go down 5 pips first before it went up 5 pips? And yes, in fact, it did. So that one would have been just fine. Good. So let's remark that. And we're going to make that red because that was a sell. All right, let's go to our next example. So right here we can kind of see that in this example we had it, things were kind of moving up a little bit, then they kind of went down, and then we had this break up right there, right? And then we hit our hydra right here. So we've got gray down, black up, green down, red up. Actually, this one does not have, I wonder if that's why I didn't have it marked. This one green is not on top on that one. So we want this green line to be above that red line, and it's on bottom. Now, that doesn't necessarily mean that this is not, a good indication sometimes to take a long trade. However, when we're looking at a systematic approach, we add parameters, and we try to add as little as possible, because if you add too many, then it decreases the amount of times that the setup occurs, right? It doesn't happen as often. But we add enough parameters that it's consistent, right? That it consistently hits heads the direction we want it to go. So in this particular instance, this actually would not constitute a hydra, simply because the green line is not on top of the red. It's on bottom. Now again, this may very well go up, but we're not looking for this one example. We're looking for overall, is it consistently going to go the direction we want it to go, right? So that's why we have those parameters. Now later, our students learn how to read the indicators much more discretionarily, and as a result, they're not necessarily looking for very stringent square peg, square hole parameters. Instead, they can just kind of read the indicators and then place a trade based on their read. But when you first get started, it's always best to start with a very systematic setup and be very clear as to what your rules are. And so that being the case, this would not constitute, you know why? Because I wasn't paying attention. This is a 5-minute chart, so this is actually not the setup we're looking at. It's just a coincidence. Okay, this is the candle we should be looking at. In this particular example, sorry about that, guys, moved up and then down. Looks like we had a pretty aggressive move down. This candle right here looks like it retraced about 4 or 5 hours of movement, right? And then after that, we hit our hydra, right? So I'm going to erase this line right here. And this is for another sell, for another short, right? So we can see that the green line is up, the red line is down, gray line is up, black line is down. They're not crossed or touching. Green line is on bottom where it's supposed to be, and this is a contrary candle. So we'd be looking for a short or a sell trade right here as well. and that moved both directions as well. It only moved up about 3.5 pips and then came down about 15 pips. So you can see why it's valuable to back test, you know, the setups, right? Because different times of day may result different, may give you different results, right? If we were only going for 5 pips, but we find that in our back testing for the times that we're testing, we can actually go 10, 12, 13, whatever, you know, however many pips, that it's common that it goes this much on that, you know, on the next candles, then we're leaving all that on the table, right? We're leaving a bunch on the table that we could potentially utilize to our advantage, to our profitable advantage. So, you know, we're just kind of, you know, using these as a target, but it's not really what we would have back tested for, right? So right here, that one would have been just fine. It only went up 3.5 pips, and then it came down 15. So that would have been good. Okay, let's remark that. Make that one red. All right, let's look for, I think we've got some buys here. Yeah, this one I think is going to be a buy, where we've got the market kind of opened up, gapped right here, right? And the reason for that is because this is Friday, and then this is Sunday when the market opened again, right? And generally on Sunday, I don't like to trade until 3 or 4 candles into the market open, primarily because, you know, if there are any gaps, excuse me, I'll skew the indicators, you know, one direction, so I want them to normalize. So right here we've got movement back up into the direction of where Friday ended and Sunday began, right? So from there to there is the gap. And then right here in the 4th candle, we get our Hydra, right? So again, you can see we've got green down, red up, gray down, black up. Green is on top here, and we've got a contrary candle to boot. So right here we would be taking a long or a buy trade. And right there, that moved from there only about 3 micro pips, and then moved up about 7.4 pips on that first candle. So good, that one would have been just fine as well. Awesome. Let me look at, adjust this. That's a pretty standard candle. Okay. So that one would have been successful as well. So what's happening here? What's happening that causes for our indicators to give us this output, and then for the end result to most likely be, you know, in this case, an upward direction, or in these other ones, a downward direction. So a lot of times what's happening is you can see that majors in this instance are releasing trades, as well as minors are releasing trades, right? A lot of times when majors and minors point up, it's because they're buying, or if they point down, it's because they're selling. And other times when majors point up and minors have gone from pointing down to then abruptly pointing up, it's because minors have hit their stop loss. The same doesn't apply to majors, by the way. But minors, so let me see, I think there might be an example right here, as a matter of fact. So right here, majors are still looking to take the market up. Minors are thinking it's time to sell, and they've just crossed and pointed down right there. So now they're committed to the short, the sell trade, right? And then as majors pull it back up, minors, a lot of times when they cross after having already crossed, you know, cross and then cross again, it's because they hit their stop loss as a whole, right? As a group, millions of traders, right? And we know that because we know the statistics on millions of traders, right? We've looked at that, and we've given you guys that information, and hopefully you guys have had the opportunity to go and look that information up. You know, they're only winning 50 to 55% of their trades. Their risk rewards have to be really, really stringent. Like generally, instead of having what we're playing with today, which is a 1-to-1 risk to reward, they've got to have like a 1-to-2 or better, right? So they're 5 pip stop loss, 10 pip take profit or better, not because that's what's best, but because that's what they have to do in order to be profitable, right? Because they're only winning 50% of the time. Okay, so a lot of times their stop losses are going to be tight. Well, if you blast through them hard enough, you're going to start seeing those lines just kind of give up and start pushing up. Now, another thing that happens is when you see an abrupt move and then you see this hiccup or this double hiccup, right? Essentially what happened was they've hit a max out somewhere up here, right? And we can see they're overbought. They're both overbought. So as that wick happened, they became overbought. And then all majors did was released trades. And for the most part, so did miners. Maybe they were taking profit somewhere in that range. And so they've now released trades. And then once that occurs, then it gives the majors the ability to pull things back up to the long side, right? Because they're not looking to sell now. They're just looking to alleviate some of that pressure to the buy side so that they can continue to buy if that's what they choose to do, right? And in this instance, of course, they do. They choose to continue to buy. And you can see here sometimes it's miners pointed up that way is because, well, most of the time when they've just hiccuped or, again, when they've crossed down and then they've pointed up, it's because if there are any left in the game that are still trying to sell, maybe they went from releasing trades to now selling, and then majors push the market back up, those minor lines will start to point up, not because they're buying in bulk, right? Not the group of them aren't buying, but rather whatever stop losses were there are starting to get hit and cascade, right? So in that instance, we would have gotten that trade as well. Mark that there. Okay, let's look at our last example here, and then we'll kind of replay a chart to see what this would look like. Okay, so right here, again, we kind of get that, we kind of had a slower moving market. Right here we get that nice break, nice big breakout, and then we get that pullback, right, that hydra right there. Green down, red up, gray down, black up, green on top, red candle. So this looks really clean, right? This looks like a textbook example. Erase that for a moment. And have the contrary candle, we'd be looking for a long or a buy trade. Right here it goes short. 4.6 pips. It only goes about 0.8 pips up. So 8 micro pips up. Then it kind of comes back up a little bit right there, 2.9 pips. And that's all she wrote, right? That one went 9. And then some more, 18. I mean, even at that point, it's done. It's obviously a loser right here, right? But that, I mean, that's going to take you out to a stop loss greater than 15 pips for what would better be served as a scalp, right? Which means if you have 15 pips, or more to the short side, then you want to get at least, 5 to 7 to the long side, so you can have at least a 3 or 2 to 1 risk to reward ratio, which means you have to hit that trade 70 to 80% of the time. So that's you're playing with fire there, having such a big stop loss out there. Nonetheless, this looked just as consistent as any of the other examples that we saw. So the moral of the story here is they don't always win, and nor do we always expect them to win, right? We know that these lose. We know that they'll fail. It's not if, but when, right? And so we account for that when we backtest. We account for the fact that we know they're going to lose. So when we backtest, we know, okay, this is how often they lose. This is the win percentage. This is risk to reward. And that helps us determine what our lot size should be. How much are we going to risk on that trade? Is it going to be 0.5%, 1%, 2%, whatever it might be? Because we know that we are going to have losers. That's okay. It's part of the plan. Because there is no such thing as a trade setup that wins 100% of the time. So because we know that, then we plan to have those losers beforehand. All right. So now that we got a good idea of what this setup looks like, let's see what it would look like as we replay it, and then how we would execute that in an alerts trade. Let's see. Okay. I don't want to get too many candles there. 1, 2, 3, 4, 5, 6, 7. We can afford one more. There we go. 8. Okay. So right here is going to form a hydra, and I just pressed replay earlier on when I was getting this set up. So I'm going to press play, and you can see that. Now here's where we want to keep an eye is on the time remaining, right? Because right now, even if the hydra forms, we wouldn't be taking it right now, right? So let's fast forward and see when it actually forms, when it actually occurs. So let's just go 100 times the speed here. It's got about 40 minutes, 35 minutes, 30. So right, come on. 15 minutes. So right about there, right? Right about there, it's good. We've got gray down, black up, green down, red up. Those are kind of touching a little bit right there. We don't want them to be touching. Green pressure on top. We do have a contrary candle. You know, we kind of had that run down and then up and then down, and now we're expecting some kickback to the long side, right, to the buy side, depending on where that ends. Although our setup is here, we wouldn't be doing anything at this point, right? So let's keep going because we still have 11 minutes and 50 seconds. Now, if we're using an alert, then we don't even know this is happening yet. We don't even know that's there yet, right? 10, 9, 8, 7, 6, 5. So this is where we find out. So let's see. So right here, 4 minutes 59 seconds. That's within 5 minutes to the top of the hour. All the parameters are there, and that's when we get the alert. Okay, and we'll look at the ones that we got today. There's a hydra. This is from today, and there's a hydra, and there's a hydra. Okay, so we got a couple. Okay, right there. So we'll look at those in here in just a minute. But right at that point, because this is the Euro USD, then this would say, you know, instead of GBP JPY, it'd say EUR USD Hydra. And then it's going to tell the time that it came in, which is your time. So right, this came in at 12:59 my time, Mountain Standard Time. If you're Eastern, then this would say 2:59 your time, right? And then right here, this will tell UTC time, 18:58 is when that one occurred. So this was about 2 minutes before the top of the hour, but still plenty of time. So that one came in 18:58. So if I wanted to go back on my charts, which are set to UTC time, then I would go to 18:58, right? And I would see, okay, is that alert there, right? I mean, obviously, if you're looking at a live chart, then it'll be right in front of you. You don't have to go back for it because you'd be getting that live indication. So here we would have gotten that live indication that said, hey, there's a hydra at on the euro versus US dollar. So then you go in, you take a look at it. I'm just going to replay it. Oh no, that's not what I wanted to do. Cancel. Right here. Take a look at it, and yep, all the parameters are there. If it remains that way for 4 minutes and 50 seconds, then I'm just going to go ahead and press that buy or sell button, right? So maybe you get your MetaTrader 4 up, and you get ready to press that buy button, right? Or you open up your app, your MetaTrader 4 app, and get ready to press the buy button on your MetaTrader 4 app. Okay, so let's get down to the last couple seconds here. So 4, 3, 2, 16 seconds. So right here, 16 seconds to go. We've got our finger on the trigger. We're ready to go with a buy. And so right here, I'll just push this buy button. 5, 4, 3, 2, 1, go. Right there. Okay. So there's our entry, and there's our exit, our take profit. Down here is our stop loss. Right? So all we want this to do is go up to that line before it goes down to that line. And we're profitable, right? So what we do in this instance is, now that we've got all of our parameters set, if we had all our parameters already set up, then we can just walk away from it. We put our phone back in our pocket, or we go about doing, we walk away from our computer, whatever it is that we were doing, just go back to doing, especially early on, again, because you don't want to drive yourself crazy by just staring at this, because a lot of times it'll oscillate. Excuse me, it'll come down, a little bit, and then go back up, and then come down, and, maybe a few times of it doing that could drive you crazy, right? And so it's better not to watch it early on. Eventually you get callous to that, and it doesn't matter as much. Okay, let's fast forward this so we can see the end result here. Let's go 25 times the speed. All right, almost there. Come on, get up there. Oh. Slow that down. So we're about 8 minutes and 60 or 25 seconds. There we go. So 8 minutes and 20 seconds or so into the candle, and we took profit for that particular setup. And that's good to understand, because just because it's a 60-minute chart doesn't have any bearing on how long it can take for the trade to come out. Right? That's 8 minutes. Maybe sometimes it'll take an hour or two, right? Or sometimes it'll take a minute or two, or a second or two, right? So what the time frame has no bearing on how long it'll take for your trade to come out. So that would have been just fine. So again, what did we do? We waited for, we may not have even been paying attention to the setup or to the market, looking at our indicator. We may not have been doing any of that, right? And then an alert comes in, and it chimes on our phone, and it says, Euro USD Hydra. And we go to our charts, and sure enough, we see a Euro USD Hydra. And we know, okay, we've got about 4 minutes left. So we get ready, right? We pull in, whether it's pulling in our charts or opening up getting our MetaTrader 4 ready in our phone, whatever it may be, hovering over the trigger right here to press the buy button. So as soon as that time gets to, 1 second left and all the parameters are still there, then we press that buy button and we get into that trade, right? Okay. So let's look at what happened today. Let's look at a couple of these from today. Get rid of that. Let's go here. And let's pull up our alerts. So GJ Hydra, GBPJPY Hydra, and this one happened at 1858. So GBPJPY, and let's go to 1858, which is going to be the 1800 candle right here, because this one ends at 1900, right? So 1858 was when this candle was doing its thing, and you can see there's no Hydra there. There's minors are hiccuping, majors are not. So actually this is a good example, because this is why we want to validate, we want to confirm that the alert is present, that the pattern is present after the alert. Because sometimes they'll dissipate, sometimes they'll go away within that 5 minutes. In this case, they did go away. Within that 5 minutes, it dissipated. The alert is gone, right? Or the pattern is gone. So we would not have taken that, because the pattern's not there to the end of that hour. So let's go to the next one. Let's see. Where are we at? Hydra. Here we go. Oh, here's another. This one's also GBP/JPY. So GBP/JPY Hydra, and this one's at 14.55. So GBP/JPY Hydra at 14.55, right there. So this is the 1400 candle UTC, and that means that this is how it ended at 14.59.59, right? Going into the 1500 hour, this is what it looked like. Within the 1400 hour, this is what it did. It went that high, that low, opened there, closed there, right? All right. So here's our Hydra, and we would be looking for a sell, right? A short trade. You see, we kind of stayed in that range. Came up here, all the way up to there, came down, kind of stayed right there in that range about, wick, and then came up. That created a Hydra for us. Now we're looking for a push back to the short side. And right there, that moved 9.2 up and 11.3 down. Now this is the GBP/JPY. Generally, we're going to use larger parameters than we would with, say, the Euro USD, just because it moves a lot more than the Euro USD does. But let's just see. Let's see if we would have won this with our 5 and 5, just with our practice parameters here. See, there we go. Okay. So is this linked? Yep, that's linked. Okay, so this is the last 5 minutes of this candle, right? The price should match 154.311, 154.311. Yes, okay. All right, so did it go, we want this to go down by 5 pips before it goes up by 5 pips. That went down 5.5 and it went up 2 on that first 5 minutes, this first 5-minute candle. So yeah, that would have won. It would have gone down 5.5 pips before it went up by 5 pips. So that would have been a winner right there. Good. Can check that one off. All right, let's check another one here. Okay. GBP/USD Hydra. Here we go. And this one's at 12.55. So GBP/USD Hydra at 12.55 right here. Good. So there's our Hydra, right? We got green up, red down, gray up, black down. We've got green below red, and we also have a contrary candle. So this is going to give us our Hydra to short or to sell. And let's go forward. Good. That one looks a lot nicer. Yeah, that's 39 pips. So way more than we needed, right? So like 8 times what we were looking for in profit. That would have been just fine. So you can see GBP/USD, GBP/JPY, they're going to move a lot more than the Euro USD, which again is of no consequence. It doesn't matter if it moves 2 pips or 20 pips, because if your risk to reward is the same and your risk percentage is the same, then you can make the same in 2 pips as you can in 20 pips, or in 2 pips as you can in 200 pips, right? It's the same. It's the same thing. So don't let anybody, get you twisted up with any of that, right? It's all the same thing. Okay, good. So I think we covered all of those. Good. So the ones that we had today, and obviously depending on what the back testing was, would have determined whether or not those were successful trades. But just using our pretend parameters today, they would have been just fine. So good. Quick recap. Again, and by the way, if you guys don't have these alerts or access to these indicators, let's get you set up with them. Okay, right now we're offering our Trader LITE trial at no cost. So we're going to talk about that here in just a second. Okay. Back to my slides here. All right. So our Trader LITE is normally like $830. It's up there, right? You're going to get the software, so you're going to get software set up. So you're going to get access to our green chart, the green chart program, where you're going to have indicators on your computer. You'll be able to test out the strategies that we talk about here on the sweep and other strategies. You'll have on-demand training videos that will show you other patterns. They'll show you other tips and tricks on trading. Weekly continued education webinars. So you're going to have webinars that you can attend that will continue your education. You'll have webinars that you can attend that will actually take trades with you. So daily trading webinars where you can place a trade with us, right? It's live. Because you're a member, we could place a trade with you in your demo account in the live market. So we'd actually be looking at the live market using a specific strategy to place trades, and you can obviously place those trades along with us. Trader chat for mobile and desktop, which is great. It keeps you connected to other traders, other coaches, things like that, so you can ask questions or see, get feedback or see what other people are asking and what their feedback, what feedback they received. So awesome tools. Of course, the real-time alerts. So you'd be getting alerts straight to your mobile device and have the indicators to be able to validate that those alerts are what they say they are, and then place that trade and see what the outcome is. One-on-one coaching, you're going to get 2 sessions with a one-on-one coach. 2 sessions. So we'll go over trade setups with you. We'll give you some homework. We want for people to be able to see that this is something they can do, that it's valuable, that it meets a personal need. All we want to be able to see is that you're teachable, you show up to appointments, and you attempt to do the homework, right? At least attempt to do the homework, and you show up to appointments or you communicate otherwise, because we want to make sure that you're teachable, right? There's 2 things you need to be in order to learn anything, right? You need to be teachable and you need to show up, right? If you don't show up, you could be the most teachable person in the world. You won't learn because you didn't show up to learn. Or if you show up but you're not teachable, right, then you won't learn, right? Because you'll be there and you show up every day, but you're incorrigible. You're not willing to learn and grow. And again, our caveat to existing traders, because we have a lot of existing traders, but there's one thing that we ask. If, I'm not saying it's a guarantee, but if we ask you to forget everything that you know about day trading and allow for us to reteach you, unless you're willing to do that, then this is not a good fit for you, right? If you say, you know what, I've been struggling, I can't figure it out, a lot of times in our experience, the things that you're holding on to are the things that are holding you back from being successful as a day trader. Those bad habits that you already have are the ones that are holding you back from being successful as a professional day trader. So we don't want that. It's a waste of your time. It's a waste of our time. We'd rather not. We don't accept everybody into our program. We want to make sure that you're the right fit for us, and obviously you want to make sure that we're the right fit for you as well. We don't want you trading with real money until you upgrade to one of our coaching programs with our program. Obviously, if you're trading with real money with something else, that's fine. We just don't want you using our program to trade with real money, because we don't want you to lose anything until you learn how to properly day trade. The LITE program is not designed to make you a proficient trader. It's to give you a taste so you can see that it's good, so you can see that it is something that you want to move forward with, right? Now, I do want to let you know, our programs to come into our one-on-one coaching, to trade our corporate funds, all that good stuff starts at $8,000 and then goes up to $25,000, right? So there's 4 different programs that you can get into. The first one starts at $8,000, and all of them come with funding. You get corporate funding, max funded at $50,000 to $100,000, depending on which one of those programs you take. And then you get at the very least 6 weeks of one-on-one coaching with a professional day trader. So it's one-on-one. Plus, you're going to have access to all the indicators. You're going to have access to on-demand recorded material and content. You're going to have the full spectrum of things. But for the Trader Lite, it's just to try it out, just to see if it's a good fit for you. And right now, we're doing it for free, no cost. Click on the link in the description to register for free. So in the description of this video, there is a link. It's tradingjobnow.com/KTG. You'll see it in there, and you can click the link and register for free. There is no credit card required. There is no obligation to move forward. It is absolutely free. It does not automatically renew. So at the end of the 30 days, it just expires. You won't have access to anything anymore, but you'll know within the first week or two if this is the right program for you. We'll know within the first week or two if you're right for us. and then we can spend the rest of that time figuring out, whether it's time to just say, hey, we tried, good luck to you, or let's start planning your day trading future with us. All right, so go into the description, click on that link, get registered for free. You're going to get the indicators. You're going to get all the training video, the on-demand training videos, weekly continuing education webinars, daily trading webinars, trader chat, real-time alerts. You're going to get 2 coaching sessions. You're going to get an onboarding, all that good stuff you're going to get for free. The best promotion we've ever done. Obviously, it's in light of what's going on in the world right now with COVID-19, and a lot of people desperately looking for ways to to get a leg up, especially in light of the fact, in light of what happened in 2020. If that happens again, and sometimes it's not if but when. When something like that happens again, what is your contingency? Do you have a contingency? That's why a lot of people are looking at these things, is because they want to create a contingency. What type of contingency would you have other than something like this? Right? What type would you have? It's not like you can have a fallback job if no one is available to work, and if no companies are able to do business, right? But the markets moved on. The markets still traded. Our traders were still able to place trades and make money. They did not skip a beat. They did not, especially with day trading, where you can trade if the market's going up or down. It doesn't have to go up. It's not like a stock, right? This is a great contingency, which is why we have so many people fleeing to day trading right now, right? And they may do it as a contingency. And eventually they realize, I can do this for a living and not work my job at all, right? If that's what you choose to do, it's entirely up to you. Whatever your goals are for your financial future, try it out. See if it's the vehicle that's going to get you there. See if it's the right fit. We'll see if you're the right fit, and then we'll see where we go from there. All right. Okay, guys, I appreciate you guys joining us for today's session. Again, if you have any questions whatsoever, feel free to reach out to us. Check the description of this video for that link, tradingjobnow.com/KTG, and register for free for our 30-day trial. And we will talk with you guys next week on Friday for another episode of The Sweep. Between now and then, have a good one, happy trading, and have a good weekend. Thanks.